Welcome again to our channel. Today, we're discussing an important and timely topic, the ban on foreign nationals purchasing houses in Canada. If you are new to this channel, please consider subscribing so that you don't miss future videos. Also see what we have for you in the description box below. As you may know, the Canadian government recently implemented a policy prohibiting non-residents from buying homes in certain parts of the country. This decision has sparked a lot of debate and controversy, with many people wondering why the government would make such a move. As of January 1, 2023, foreign commercial enterprises and people will be prohibited to buy residential properties in Canada for 2 years in an attempt to cool the speculation that helped propel the country's housing market to unprecedented highs over the past 3 years. The ban, which was passed by Parliament on June 23, is a cornerstone of Trudeau's plan to address Canada's frenzied housing market, which has had issues with limited supply, leading to bidding wars, extreme buyers' anxiety, and skyrocketing costs. Through this legislation, Canada says it is taking action to ensure that housing is owned by Canadians, for the benefit of everyone who lives in this country. Here's everything you need to know about the ban. What are the penalties? Anyone who's neither a Canadian citizen nor a permanent resident will not be able to purchase a residential property in Canada as of January 1 for 2 years, according to this new rule. The ban also includes non-Canadian company owners, which the regulations say will prevent them from avoiding the prohibition. Non-Canadians found in contravention of the ban will be fined up to $10,000 and may be ordered to sell the property, according to the legislation. The impact of foreign ownership has been a hot topic when it comes to Canadian real estate for years, even as attention grows on the impact of domestic investors who the Bank of Canada says make up roughly 1/5 of purchases in recent years. The Canada Mortgage and Housing Commission released its 2020 condominium apartment survey results in May of 2021, saying that the share of non-resident-owned condominium apartment units was in the low single digits in most of Canada's largest centres. Cities like Vancouver, Toronto, Montreal, and Ottawa had shares above 1%. Canada Mortgage and Housing Commission said that related work from Statistics Canada also reports comparably low shares of non-resident ownership for cities surveyed in 2019. Statistics Canada finds in its 2019 data that non-resident owners tend not to be owner-occupants. Non-residents own 15 to 20% of non-occupied units in Toronto and Vancouver. This suggests that non-resident ownership is concentrated in the secondary rental market. Canada Mortgage and Housing Commission and Statistics Canada results combined suggest that in the secondary rental market, non-resident ownership is likely concentrated in newer and larger rental buildings. Critics say Housing Supply Act won't help affordability crisis. The buildings generally command higher market rents, they explain. A broker said that he took issue with the foreign buyer ban because he says foreign buyers make up a small fraction of purchasers in the country. They're not the ones driving prices higher, and they're not the ones that are absorbing or purchasing all the inventory. Canada already charges extra tax on foreign buyers. Ontario also raised its non-resident speculation tax on homes purchased by foreign nationals from 20% to 25% in October 2022. There are some exceptions, including for those with temporary work permits, refugee claimants, and international students who meet certain criteria. According to MLT Aikens, a law firm, refugees and non-Canadian individuals who purchase residential real estate with a spouse or common-law partner, provided that their spouse or common-law partner is a Canadian citizen, a permanent resident of Canada, a person registered as an Indian under the Indian Act, or a refugee, can also be exempted from the ban. What type of properties are affected? According to Canada Mortgage and Housing Commission, the ban applies to residential property, which includes detached houses or similar buildings of 1 to 3 dwelling units, as well as parts of buildings such as semi-detached houses, condominium units, or other similar premises. However, recreational properties like cottages or lake houses will be exempt from the ban. The new law states that residential property not located within either a census agglomeration or a census metropolitan area will not be subject to the ban. This generally means that municipalities with a core population of less than 10,000 people will not be subject to the ban, whereas communities with a core population that is greater than 10,000 people will be impacted. The foregoing impact touches upon the federal government's desire to exempt certain recreational properties from the ban. However, it is noteworthy that some smaller municipalities where people own recreational property will still be affected. The law also states that any land that does not contain any habitable dwelling, that is zoned for residential use or mixed use, is subject to the ban. This means that the ban will apply to certain properties that would not generally be considered to be residential at the time that a purchase occurs, but rather focuses on the potential of such land to be developed into a residential property at some point in the future. The effects of the ban, though, remain to be seen, especially as the impacts of the Bank of Canada's interest rate hikes continue to ripple through the economy and inflation, including food prices. Fears of a recession in 2023 have roughly 41% of Canadians putting plans to buy or sell a home on pause, according to a survey by Remax. We hope that these tips have been helpful, and we wish everyone in McLeod County a safe and warm winter. Thank you for watching. We'll see you in the next video.